Timothy from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning I go through what happened globally around the world and try to forecast what we may see this coming weeks. I'll show you what and how investors and traders can make money on our stock market and globally. I'll show you what is hot and what is not, and what you should hold and maybe what you should fold. So enjoy the presentation, and if you have any feedback, I would really appreciate your comments. First of all, let me show you what happened on Saturday morning. The Dow was down 277 points, nearly 1%. The S&P 500 down 0.5. The Nasdaq Technology Index was down 0.5%. In Europe, the Stoxx 50 Index, which comprises most major European markets, was down 0.2%, and so in London, the FTSE 100 Index was down 0.5%. In Japan, the Nikkei Index was down 0.2%, and in Shanghai, the market was almost steady, unchanged. And our market on Friday, we were down 26 points or 0.4%, and gold was up $3.40 on Saturday morning. However, what I'd like to show you first of all is what happened over 2 weeks, so we can have a perspective about the global trend. So we start by over the full week, and from around the globe we start with the Dow Jones. That's the industrial average index, which makes up the top 30 US stocks, and which had a weekly rise, as you can see here, of 3%. That is 846 points. However, we like to combine 2 weeks together to see what really happened as a trend. So even though the market was up by nearly 850 points last week, over the 2 weeks was only up by 113 points. So that really straight away tells you that there was a major loss the week before last. So it's very important we take the 2 weeks into perspective so we understand the trend in a better way. The Nasdaq Technology Index was up 205 points over 2 weeks, and the S&P 500 Index, which is of course the broader index, was only up by 32 points over 2 weeks, despite the major rise of 3% last week. As you can see, it was only up by 1% over 2 weeks. Now the US dollar was 1% higher over 2 weeks, and that of course the Australian dollar, you can see, was down nearly 2% over 2 weeks. Gold over 2 weeks was down $5, even though it dropped by $17 last week. Obviously the week before we had a major rise. We can see that 2 weeks ago, or 2 Saturdays ago, the market closed at 1,590 US per ounce. However, last week it only closed by 1,573. Silver was down nearly 3% over 2 weeks, and West Texas crude oil was down by nearly 5% over 2 weeks. And if you're interested in the various other commodities, all you have to do is talk to us, and we'll give you a copy of that slide or give you some more data. Now, if you look at the week before last, you can see that the market was actually down quite a bit. So we've had last 2 weeks. Last week was good, but over the last 3 weeks, the market was actually really bad. So we show you what happened last week versus what happened the 2 weeks before last. Okay, on our market gauge, that is the ASX 200, is made up to a greater extent by 2 major sectors, the financial and the materials. When both sectors are up or down considerably, the market usually reacts accordingly. Well, over the last 2 weeks, the financials were almost steady, and the materials was down by nearly 4% because of the price of iron ore, and of course China was closed for the lunar holiday. Now what happened then? Our ASX 200 over 2 weeks was down by 1%, was steady last week, but over the last 2 weeks it was actually down by nearly 1%. Looking at the various stocks going down the line, we can see that the best stock last week, if you go down this particular trend, you've got Woolworths up 2.1%. You've got Macquarie Bank up 1.5%. But over the last 2 weeks, you can see that Worley was down nearly 8%. Newcrest Mines was down nearly 9.5%. And Bramble down 22%. AMP down 6% over 2 weeks. So again, we like to put the 2 weeks in consideration so we can actually have a better perspective over the trend. And this is the week before, if you want to really analyze what happened last week or the last 2 weeks versus what happened over the last 3 weeks. We show you this in our presentation. In terms of volume, on Friday we had a good reasonable volume, and 35% of all stocks advanced and 23% declined. And you can see over the last several days, most of the days we had major advances over the declines. 2, 4, 5 versus 3 declines. Looking at the week by week, you can see that last week the advances and declines were almost equal, but the week before we had a major decline in the market. And after several 3 weeks of reasonable trending up, we had one bad week and then one steady week. Now we have a mechanical system that we have designed over the last 25 years, and it's based on technical analysis, which include 8 technical indicators across 2 time frames. Through them we are able to create strategies for the investor, the conservative trader, for the aggressive trader and the very aggressive trader. And what we see on this slide, week by week, what our mechanical system has recommended, or at least from the indicators, what it actually portrayed. Well, on Saturday morning we can see that the Dow going from 3 weeks of reasonable bullish trend to a bearish week to a recovery last week. However, what happened on Friday is it's only 1 day out of 5, and that means we still need to wait on the daily to see what happened on the daily chart. But the weekly doesn't change on only once a week at the end of the week. So these are the weekly trends from the indicators, and won't change until next Saturday. And you can see that for the aggressive trader and the very aggressive trader, most of the American market happened to be bullish. The VIX is actually the fear gauge is starting to be a bit of concern to the very aggressive and the aggressive traders. Gold neutral, but for the long term bullish for the investor. And again, the investor relies on the monthly chart, so again it doesn't change for more than once a month, so it takes time to change. Oh, by the way, the investor relies on the monthly and the weekly, while the aggressive trader relies on the weekly and the daily. As I said, there are 8 indicators per one each time frame, and we compare one time frame with the other, and provided the indicators tell you whether it's bullish, bearish or neutral on one, and then you look at the other time frame, and provided the indicators confirm with the longer term, then we trade. So there are obviously a strategy behind it, and we run, by the way, courses to those people who want to learn from our mechanical system and how to trade. So all you have to do is call us and we'll help you out. So give us a call and we'll tell you if you want to subscribe to our market report, to our education programs. Okay, so if you look at crude oil, we are very bearish on the crude oil. Soybeans, again, bearish. The Australian dollar, bearish. The euro, bearish. And the US basket of currencies, bullish. This is the chart for the Dow Jones. That's the weekly and the daily. we had a reasonable week last week. Even though we had a decline of 277 points on Friday or Saturday morning, the whole week it was still bullish. It didn't close at the very top, but still closed above the 50% of that candle. So that's still very bullish. And you can see that the parabolic stop and reverse had a long term week by week, just 1 week of reversal, and then reverse again on last week. And the stochastic still concerned with the weekly trend, and that is still bullish. On the daily, the stochastic remains bullish despite the red candle, and the parabolic and stop and reverse still bullish. And when you look at the 50-day moving average above the 100-day moving average, the 100 above the 200-day moving average, the long term is bullish for the American market. Now, our mechanical system again tells you what happened to our sectors, not last Saturday, but the Saturdays before. These were our, at least, you know, the indicators were telling us the all ordinary bearish, and the energy bearish, the financial bullish, and that's what happened 2 Saturdays ago. To compare what happened last week day by day, this is the weekly and this is the daily. Well, you compare, and sometimes it takes time for the weekly to change, but the daily can change a lot faster. So even though we had a bearish on the all ordinary, we started the week with bullish, 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 and then turned neutral at the end of the week. So if you were trading based on our recommendation with a bearish trend on Saturday or Monday morning, then of course it reverses very quickly. And because we have one signal on the weekly which does not get a confirmation from the daily, then obviously there is a neutral. You need to have a confirmation between the weekly and the daily, and the daily has to continue to be portraying the same recommendation before it continues to be trading that way. So you can see bearish, bullish, then obviously we ended up being neutral for the whole week, and that's exactly how we finished. So if you want to learn about all how the mechanical system that we have designed over the last many years, then obviously you have to talk to us, and then we can help you out. This is the weekly ASX 200. Last week we almost finished at the very top, even though we had on Friday a small decline. Then that weekly candle showing you that it finished at the very top, really that's reasonably bullish, even though the market today may actually open very neutral or maybe slightly up. We can still see that our market on the weekly and the daily seem to be more or less on the bullish side. However, compare the indicators here. The parabolic stop and reverse bullish for the weekly, and here the stochastic is neutral. So we have a contradiction between two indicators, two major leading indicators. When you look at the daily, the parabolic stop and reverse is bearish, and you have here the stochastic slightly bullish. So you can see that more or less our market, when you compare two time frames on the weekly and the daily and see how the indicators are portraying on each time frame, I think the market is more or less sit on the sideline and wait. Again, the XJO neutral, ANZ bullish. The week before we said to you bullish, that's on Saturday, 2 Saturdays ago, and when we start on Monday we ended up with a bearish, went turn into bullish. So there is of course a contradiction between the weekly and the daily, and then obviously we look at the very strong bearish on the CIMIC, and CIMIC would have actually turned to be a very good profitable for you. When you look at other trade like QBE, we had bullish, 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 and then the morning on Monday the daily were actually neutral, but then turned bullish, bullish, bullish for Tuesday and Wednesday and Thursday. and that's how we finish on the day. TCL, that's Transurban, ended up with a good trade, and so is Suncorp. Bearish, 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 and we had a good confirmation on the daily. So as I said, the weekly tells you one thing, but then you need the confirmation on the daily as well, and continuation of that particular trend on the daily to confirm the weekly, which changes only once a week. All right, so if you go now to the daily volume change, you can see here on the weekly, coals had over the full week a rise of 2%. That's the price. The week before finished at $16.50. Last on Saturday, finished or Friday, finished at $16.90. And the volume was quite considerable volume, 164% above the moving average over 50 weeks. This is the 50-week average volume, and last week we had 21 million transactions, so 164 above the average. High rise in the price and higher rise in the volume, good indication what you should trade. You look at also DEXs units, CSL had a good trending as well. So again, you look at those and you compare them and you say that maybe there is a good trend. Nothing on the bearish side. And on the mid cap, data 3 that's been coming up week after week after week. It's been going up and up and up and up and up. 3.7% rise in the price. Unfortunately, we can't trade CFD on this particular stock. But Nick Scali, we are trading at the moment. Last week was up 18% with 319% above the volume. And I'm going to show you shortly how we made money on Nick Scali. Again, that's the bearish and that's the bullish on the mid cap. If you want a copy of the slide, all you have to do is talk to us. On the daily side, the volume on Friday, you can see that Transurban was up 0.3%, not a great deal, 60% above the average volume. Again, AMP was down 1.4% with 170%. This is actually a good company to actually go bearish, maybe this week. On the mid cap, you have Bellevue Gold, had 9.8%, nearly 10% rise in the price with 917%. Again, it's maybe worthwhile looking at. It went from 46 cents to 50 cents on Friday. So again, look at the bearish side. A company called Estia Health Limited, down 3.3% in the price with 115%, from 673 to nearly double that price, to double the volume. Again, to finish off, I want to show you how we made some money on CFDs. We had a good week. We had previous to last week, we had really a bad 2 weeks, but fortunately last week we made some money. As you can see here, we traded mainly the ASX 200, that's the Australian 200 ASX, the XJO, that is the index. And as you can see here, we were in and out and we made some reasonable profit, relatively speaking. And what we stand today, we have again a bearish position on the ASX 200. We have a bullish position on Elders. We are, steady, not making any money, we're not losing any money. But look, Kathmandu is making 207% profit. So again, that's actually a good profit. And by the way, we traded Nick Scali. It's not showing here, but we made a little bit of profit on Nick Scali. Finally, our disclaimer: before you do anything at all, please make sure that you understand that everything we said here today is only of general advice only. Nothing is personal or private. So before you take any action, please consult with us or with your professional advisor. There is no guarantee you're going to make money on anything you do in the stock market. The market is actually risky, and you need to understand your risk and reward before you trade. If you have any questions, all you have to do is ask. How to ask? Well, here we are, our information. My email address is george@fssecurities.com.au, fssecurities.com.au. This is our website. And if you want to call me on my mobile, I'm available 7 days a week. 61 if you're ringing from overseas, you don't need the 0. 61 411 259526. 61 for overseas callers, 411 259526. And that's me. And finally, have a good week, happy trading, and good luck.